Right, hello mate, this is your 30-minute reversal. This is your chart here, so I'm going to find the right point on my chart. That's the 30-minute reversal. Now, the first glaringly obvious thing is it's straight into the H1 and straight into the round number. Ideally, you want the H1ATMA, I should say. Ideally, you want to be trading to something like that. Now, I've had to really think about this because there's so many subtle things that I'm aware of subconsciously that perhaps, you know, I can't get into my videos and onto my charts properly for you. The first thing is, when you're looking for a reversal, the first thing you want to see is maybe a M5 or an M15 reversal. It could have been because I don't know what time zone you're in, but it could have been because you were in the UK and you got up late. Well, you got up early, but too late for the trade. But the meat of this trade should have been around here, and then you would have actually got some profit to that level there. We are categorically contra trend, so you know I would want to be drawing descending trend lines on here. So you know, as far as that's concerned, there was definitely room to there. It's just that this this round number right in your way was what caused the problem. The other thing, well, I know I see you could say when you entered you were probably through the round number actually thinking about it, but let's just finish off doing the analysis on here. You must always remember to put your hourly. If you look at the gold trade I said that was a textbook setup, you will see the you know, I've got room to the hourly and room to various levels to trade to. I think there was a pivot and a round number and something else there as well, but we were far from overextended as well. And when I'm taking reversal trades, I want to be overextended. So the wisest thing to do in this instance would have been to wait for the trend to turn back in your direction with the various conformations, with the the break of this upwards, or slightly slanting upwards ascending triangle, and just take the safest trades. So it's always about taking the safest trades. So let's put the H1 on there, and I think this is the main area that caused a bit of a problem. That's the H1 there, and if we look at it prior to the potential entry, I'll put the vertical on there, you'd already tested the H1 level and failed to break through it. What you'd ideally want is a break through the H1 and then a pullback and then a continuation for this to have been right. We weren't oversold here on H1. I don't think we were on M30 either, might be wrong. M30 a little bit, and you could say a bit of divergence, but it's not really clear. So down to M15 again. I'll need to highlight that vertical, apologies. Let's put another one on there. There, that's the new bar after the H1. There we are after third. So we did in fact test that H1 and fail to break through it even on that candle there. So I think really that was the main problem. We were trading smack into that H1 and get back onto the, oh, this is your M15 now actually, so that's the break and close, the RSI histo break and close. We still, remember, hadn't closed through H1 on the H1, which is the important thing. I will double check that now. There it is there. The open of that red bar, because I would technically call that the open was 2021. Yeah, 27. Let's just double check that. Come on. 2027, yeah. So it had failed. It had failed through. So a distinct failure on this. But be aware of those higher time frames. It was really touch and go. You didn't do much wrong at all, to be honest with you. But you know, I've got caught out by these so many times trying to get in late in late this time of the morning. If we go down to M15 again, we can see take the scroll off, sorry. The M15 had reversed up way over here. There, same bar actually. There. That's the reversal on the M15. Now we can see we've got the power, and this is perfect. A bigger, you know, oversold, bigger discrepancy on the two bars there. Confirmation, break and close through. This is when you should drop to the M5. And study what's going on here. Basically we pulled back against ourselves instantly, so we needed a new M5 up, and then we'd have to double check the M15 hadn't reversed on itself here as well. Which it hadn't. There's the reversal level, low, high, high, low, high, high. So we didn't close below, so an M5 would have been good enough to get back into that potential long trade. The M5 is there. But we didn't get the M5 trigger, momentum trigger. What I would have done, and this is exactly what I do every trade, I would have double checked the M1, and I have to say I would have entered there on the M1. So that's at that level there. Put a on that candle there. So at that point we would have suffered a little bit of drawdown, 6 or 7 pips. It looks horrendous. But you just put your stops. Stops need to be, well, in this instance, you know, your worst case scenario stops below, well below 1. So a 15 pip stop from an entry there, or a 12-15 pip stop would be fantastic, no problems at all with that. It drew down on you about 6-7 pips, add the spread to that, a couple of pips, say 8 pips, and then this would have gone up. So really and truthfully, it's not the cleanest trade anyway, but it would have made a profit if you'd entered on the 15-minute, which you know, I suggest you do on these, and it's so difficult really. These are the sort of things, you know, when I looked at this when you first posted it, I could see we hadn't had any sort of overextension going on. We're trading against the trend. When you are trading against the trend, you want to, you know, that's why I trained myself to go for 5 or 6 pips and just close the trade and be done. So I would have had my 5 or 6 pips out of this one because it is contra trend, and I'm sure I don't make that clear enough in all the videos, but when you're trading contra trend, even on end of day trades, you know, when they're overextended, I take my trades at obvious levels. Oh, and the last thing, another important thing on the H1 chart that I don't mention enough, apologies for this mess, is old support. When a trend reverses, it will have a problem at an old support level above it, and there was your old support level. This was where you were considering trading. This is where, remember I talk about tests and retests? Always, whoops, wrong one. Always, apologies for all the lines on here, and I hope you're following this. Always draw your old support level, the last support broken, to the left hand side. In other words, the most recent one, as price is moving up, is where price will have a problem. And if you look at this reversal just after your entry there is where price stopped. So, you know, not only have you traded straight into your H1 reversal level, there is also the, if you look at that level there, I think it touched it to the pip actually. The high of that was 62096, and that support level there was 62094. So missed it by 2 micro pips. So, you know, that would be where I'd expect this to potentially stop the price in a contra trend trade. I hope that you know, I do mention this on a lot of the videos, so there's there's a lot to be learned from this, and hopefully make notes. You know, always make sure you draw your levels on all the different reversal candles, M5, M15, M30, H1, and then look for your most recent level to the price, I mean, of a potential area of that will cause the problem. It's a retest, test and retest, that's the mantra. The other thing that I should say is that when you can sort of not flout this rule, but you know, be a little bit less concerned about all these levels, because remember, you're trading outside of the market, what I call the grinding period, when they're positioning the price, is when you're right in the middle of the opens, because you will have to act fast, because they, you know, for cable for example, they will drive it down and they'll drive it up and reverse it against yourself. Then is when you have to rely very much on the momentum of these bars, and just a colour change should be enough to give you a consideration for a trade. So there is a lot to be taken in, I know, but if in doubt, trade, always wait for the trade to resume the trend, especially if you aren't overextended at that point, and in the morning it's highly unlikely you will be overextended. Okay, sorry for the long-winded and messy, potentially messy charts, but I hope that's covered most of what you're requiring, and if you have any questions, just let me know. Alright, thanks for watching, have a good one.